Now, I do not know if it is, it would be right to compare on a year-on-year basis, but even if you look at it on the basis of a low base, you still seem to have had quite a good quarter. What's led to this performance, the improvement in disbursements?
Yeah, so even sequentially on a quarter-on-quarter basis, it has been a strong quarter, and even if you leave the previous quarter out, which was slightly impacted by COVID, and take the take the Jan, Feb, March quarter. Even against that quarter, we have done extremely well. The reason is, yes, we are in affordable housing finance, and it's a sector that is doing very well. As the economy has rebounded, I think customers, this was a demand that was always there in the country. And as the economy rebounded, I think customers have come back. There is a strong demand for affordable housing, and we are doing well against that. Our credit quality has been excellent, and as a result of that, we are able to focus more time on business development, getting new business, etc. Rather than getting, you can say, entangled in collections. So if you look at our asset quality, we have our GNPA has come down against the previous quarter from 1.9% to 1.7% this quarter. Even in other buckets, that is 30 days past due, 1 day past due, there has been substantial improvement in the credit quality side. Disbursements, we had our best quarter ever with about 515 crores of disbursement. AUM growth has been good. On a year-on-year basis, it's about 24%, and a quarter-on-quarter, it's about 7.5%, so about 30% annualized. So overall, strong quarter, and can't complain.
Mr. Viswanathan, I'm just curious because this is something that we're trying to gauge, speaking to various lenders, particularly in the mortgage segment. If you can splice the latest loans and your loan book for us, what are the key trends that you're witnessing in the sector? What geographies are really buzzing, and what are the average ticket sizes of the loans that you're dispersing?
We have always been focusing on ticket size, up to 25 lakhs. So these are first-time home buyers who are purchasing either small apartments or they are building their own homes. Generally, the average ticket size tends to be between 5 lakhs to about 25 lakhs, and the average tends to be around 10 lakhs. So we are in the same segment. Nothing really has changed, as far as the ticket size or sector is concerned. And if you ask geographically, looking at it, we are largely in all the industrialized states. So if you look at Gujarat, Maharashtra, Tamil Nadu, these are our large states, plus Andhra and Telangana. And with the economy doing well, with exports doing very well, these are the states that are also doing well economically. And, so we are also doing well. And so I would not really pinpoint any specific area that's doing more better than others. I think across these states, I think the growth has been very good for us.
Sure. Your company has clocked the highest ever quarterly disbursals this time around. What's been fueling the growth? And more importantly, where do you see these growth projections headed? If you could just share with us what your outlook is for the second half of the fiscal.
We have, we had held up some of our expansion plans during COVID. So I think first 2 quarters of last year, that was a time when we were also looking to expand, but we had to hold it up because of COVID. So those expansion plans are now fructifying. We are adding more, more locations, where we are present. So currently, we are present in 161 distribution points, which has gone up by about 24 compared to last quarter. So growth is coming because of increased presence in the states where we are already present. Plus, I think demand has come back to pre-COVID levels, or it's even better than pre-COVID levels now in affordable housing. So I would say these are the 2 factors that's contributed to the all-time high dispersals.
Okay. Manoj, also, I'm just going through your asset quality. That's witnessed slight improvement as well in the second quarter. Looking at the current market dynamics, how much stress do you expect reflecting on your books going forward? If you could just share with us what kind of NPA trends as well as the outlook on provisioning that you foresee for the second half of the financial year.
So we have been very conservative on provisioning across throughout this whole COVID period. So we took our first provision for COVID in March last year itself. That's March of 20. And we have been taking good provisions in all quarters right up till now. So if you look at our provision coverage ratio, it's 70% plus. And if you look at overall provisions as a percentage of our asset book, it is about 1.3%. So we are very nicely provisioned. And I think from going forward, we should start seeing our credit cost coming off. Because now we are seeing seeing the delinquencies normalizing. And as you can see, our 1-day past due was reduced from 8.9 to 7.6%. And 30 days past due was also reduced. So as the delinquency keeps coming off and customers keep rolling back, to current levels, the credit cost will keep coming down. So we are at 1.7% GNP as of now, and we see that kind of let's say rolling back to pre-COVID levels in about 6 months' time.
Okay. Now, you've said, as far as your disbursements are concerned, that you can't complain, Mr. Viswanathan, but I'm trying to understand, this is certainly a season when I think a lot of people go out and buy homes, and there is a lot more enthusiasm, shall we say, in the real estate space than there has been in the recent past. So given all of these factors, where do you see your loan book at the end of this financial year?
We have been, aiming for a 30% year-on-year growth as far as AUM is concerned, and we are on that trajectory. So if you see our this quarter, AUM growth against last quarter, 7.5%, which is 30% annualized. So we are on a 30% trajectory. As far as affordable housing is concerned, it does not have that kind of skew that you see in other products. So it's not a product where people wait for the season or wait for Diwali to complete their purchase. It's more a need-based approach. So the skew is not as high as in other products. It is more moderated. So I would say it's more like a 45-55 or a 40-60 kind of a skew between H1 and H2. So we don't really see that kind of big jump in H2 compared to H1. So we are on track to on track for a 25 to 30% kind of an AUM growth year-on-year on a year-on-year basis.
I'm also quite interested to find out, I believe you target first-time home buyers. What is the kind of trends that you're witnessing in terms of the profile of the buyers that you have and that you've onboarded this financial year? Is there any difference that you're seeing? Any new trends that you're seeing?
Not really any very different trends. First time home buyers typically come from income bracket of between 20 to 50,000 rupees of family income per month. Largely the same trends. And they typically start with a smaller home, if it's an apartment, it is normally a 1-bedroom hall kitchen, priced at say 15 to 20 lakhs. So that's how they start. Or if they're constructing their own home, they start with maybe 3 or 4 rooms and then, plan the further construction after a couple of years. It's the same kind of customers. There is a little bit of, you can say, impact of COVID. So some of the sectors, say, for example, the school sector or the travel sector, there are fewer customers coming from those sectors. I think other than that, most of the other sectors have come back in terms of revival of the sector. So the customer profile is more or less similar to what we used to have earlier. One, you can say, changing trend is that more and more customers now have a credit bureau score. Compared to earlier. Earlier, I mean, if you look at it 5 years ago, fewer customers had credit bureau scores. I mean, they didn't have a credit experience, they didn't have borrowing experience. That is something that is changing quite dramatically in this segment also. So currently we have only 30% of the customers who are coming to us who don't have a credit bureau score. So they don't have any borrowing experience. 70% of them have some borrowing experience, either for a consumer durable loan or a personal loan or a gold loan or so on and so forth. So that is one major, change that is taking place in this segment. The other change is, of course, that more and more customers are becoming, you can say, um, friendlier, friendlier with using technology or more comfortable using technology and digital. So they are able to download apps, they are able to use apps. So even in our customer base now, almost 70% of the customers have downloaded our app, they are using our app. They like to check their loan balances every month. They like to make small prepayments, from their mobile phones. So that's another emerging trend that we are seeing in this segment.
Lovely. Certainly a positive trend in terms of the credit scores. It would help you, I'm sure, choose the right borrowers. Thank you so much for taking the time, Manoj. Pleasure speaking with you.
Thank you. Pleasure is all ours. Thank you.
All right, on that note, we're taking a short break on this program, but more on the other side. Do stay tuned.